James Benamor's journey with Amigo loans is a classic example of a meteoric rise followed by a dramatic collapse. It all began in 2005 when Benamor founded Amigo Loans, a company specializing in guarantor loans for people who couldn't get credit from traditional lenders. The business model was simple. A borrower with a poor credit history would get a loan, and a friend or family member with a good credit score would act as a guarantor, promising to repay the loan if the borrower defaulted. The rise. Benamor's business grew rapidly. He was known for his entrepreneurial spirit, having started his first business at age 21. By 2018, Amigo Holdings was so successful that it was floated on the London Stock Exchange, and Benamor's personal net worth skyrocketed to an estimated £1.1 billion. The company's success was celebrated as a fintech triumph, providing an alternative to payday lenders with what it claimed were lower interest rates. The fall. The downfall was swift and multifaceted. The Financial Conduct Authority, FCA, a UK financial regulator, began to scrutinize the high-cost credit market more closely. It was found that Amigo Loans was not adequately assessing the affordability of its loans, leading to a high risk of harm for both borrowers and their guarantors. A significant number of complaints started to surface, with the Financial Ombudsman Service, FOS, upholding many of them, often finding that the loans were irresponsibly sold. Benamor publicly criticized the company's board and the regulators, accusing them of committing slow-motion suicide. He eventually quit the board in 2020. The company's shares plunged, wiping out a vast majority of its value. By 2022, Benamor's net worth had dropped to around £100 million. The aftermath. Amigo Loans ultimately failed to raise the necessary funds to pay out compensation to its mis-sold customers. In 2023, the company announced it would be winding down its business and facing liquidation. This process would ensure a final payout to creditors, including the many borrowers who had been harmed by the company's practices. The Amigo Loans saga serves as a powerful cautionary tale about the dangers of unchecked growth and the importance of ethical lending in the financial industry.